What's up, ladies and gentlemen? I have audio going in the background. Welcome to another episode. I got my brother from another mother, Austin, with us today, Mr. Limitless Credit Repair himself. The guy's been phenomenal at helping us rebuild our credit for some things that we went through in the past. And man, I've heard nothing but good things from testimonials and watching TikTok videos. And man, I want to just jump right into it. I don't want to waste anybody's time, man. You've even been able to get people money, right? Have you ever heard of hiring a business to fix your credit, but they end up paying you? That's the weirdest thing in my entire life, man. So we're going to talk a little bit about that, a little bit about credit, some interesting wealth hacks that people can take advantage of, even if they're not wealthy, right? It's going to help them set them up to become wealthy in the future, potentially if they do it the right way. But welcome, man. How you doing today?
Doing good, man. Doing good. I don't have the kids today, so it's been nice. I've gotten so much accomplished. I tell my wife I would be much richer and more handsome and more fit if I didn't have kids, because man, it's wild, especially working from home with them, So
I agree, man. And how many do you have? 2, 3?
2, yeah, 14 and 4, yeah.
The 4-year is probably the harder one out of the 2, right?
Yeah, but it's and they're a blessing, bro. They really are. You know that. You got like 17 kids.
I got a few kids. I got 6 kids and a grandson, and so they may just pop right in during this live. Who knows?
You're gonna drop some knowledge as far as wealth goes, I'm sure.
Yeah, for sure. It's a blessing though in the end. We prayed for a big family, but everybody's like, how do you do it? And it's like one of those things, like you just do it, right? You just wake up every day and you just trust the Lord and you just make it happen, right? And there's mistakes you make along the way, and you correct yourself, and it's a learning experience. But every day I think that you get better and better at becoming a dad, a friend, a parent. And that's my whole thing right now. I'm in this season of life where, like, I'm in financial services. I help people protect their assets and move things around and do life insurance and stuff. But like at this season in my life, I'm more about the whole man. And when I say man, I mean men and women, but I'm about the whole man. Like, how are you doing financially? Okay. That's like the base level, right?
Right.
How are you doing emotionally, right? How are you doing in your family? How are you doing spiritually, right? There's like levels to this. And so that's kind of like my whole deal right now. We're going to be moving into really just catering to people on a more holistic, life basis than just finances. So there's some interesting things in the pipeline, but yeah, it's an interesting time.
I mean, I'm sure, I'm 36. I'm sure when you were younger, it was like, okay, if I make 6 figures, I'm going to be successful.
Totally.
And then you realize like success shouldn't be the goal. Significance should be the goal. And that's helping other people be successful with their goals and their dreams. My success in my eyes is my wife looks at me and she's excited and loving me. And I want my kids to be happy. That's really success in my eyes. But, yeah, I mean, it means something different for everybody.
Yeah, it's about impact, like you can make income. Income is fleeting. It comes and it goes. You could be a millionaire one day and lose it all the next, right? But what impact are you making?
For sure.
Impact is like, that's the key word. That's like the thing. People need to reach for impact versus just making money, because you can make all the money in the world and still be the most miserable, and like you just hate your life, you hate your family, right? Money doesn't solve those problems. It doesn't. I spoke to somebody the other day. She said when her friend started making lots of money, she started to act differently, right? And then she like stepped back and she said, well, I don't think money changed her. I think it was already there. Money just magnified it, right? Money's like a magnifying glass. It kind of brings out what's already deep down in those caverns of your life, right? If you're selfish and greedy and, hateful and mistreat people, it's going to be way more when you have a lot of money and all the resources in the world than if you're just hanging on by a thread trying to make it happen,
Absolutely. If you're a jerk with money, you're probably going to be a jerk without money, and vice versa.
Yeah, for sure. So what's new in your life, man? What do you got going on business wise?
I mean,
you've been in business for how many years now?
Going on 6 years total in credit repair, but my business, Limitless Credit Repair, going on about 4 years, I believe.
Nice.
4 or 5 years. And Yeah, I worked for a company for a while, and I hired a mentor to help me start my own business. And he's like, "Dude, you're making all this money for this company. Why don't you start your own company?"
Yeah.
And I said, "Sure, okay." And I've owned businesses like since for 15 years, and I just
Mhm.
never thought about that. But
Mhm.
yeah, and ever since then, man, we've been able. Just this year, we've had a record-breaking year. And what you said earlier too is we're able to sue the credit bureaus. We're able to sue some of these collection companies, and we can get our clients compensated. It's crazy, man. Like,
Crazy.
in the industry of what I do, people charge thousands, sometimes tens of thousands of dollars for credit repair, but there's very few that can do what we do. And I just have a powerhouse
Mm.
of attorneys that, dude, they just, they're in constant conversations with Equifax
Yeah.
and suing them. So hopefully we dive into that. But I have questions for you too. So we'll full circle this thing, man.
Absolutely, definitely. Hey, I had a question for you. How many clients have you served over the last 4 years? Do you have an idea?
I don't have an idea, and I should
It's
have.
probably in the hundreds, right? Do you think in the
So
thousands?
directly, it's definitely the thousands. I don't know about tens of thousands, maybe tens of thousands,
Sure,
but as
sure.
far as like social media,
Yeah.
I mean, I would say hundreds of thousands.
Mm.
And
Right, because the free knowledge that you drop how many you go live daily or weekly, or how many times a week?
I typically go live 4 to 5 times a week
Okay.
on TikTok.
And you're
Instagram
helping
used to, but
hundreds and thousands at a time, yeah.
yeah, I mean, so I don't have as big of a following as you do on social media, but I got about 166,000 on TikTok and
Mhm.
90,000 on Instagram.
Yeah.
But I use Instagram as like my business card, and then
Mhm.
TikTok is where I really, leverage the platform to help as many people. So,
Got it. So thousands under your belt. Um, and how many would you say, it's probably a hard number to pull, but how many would you say you've successfully been able to get compensated on the back end? Actually
oh man.
hand them a check.
So just this year, we probably have like a couple hundred cases.
Wow.
So if a client comes to us, I would say about 90% of the clients that we have, they either have a violation on there and we can sue over that. So, if we have 50 people sign up in a month, then typically, 90% of those clients are going to get a check back and
Wow.
those items are going to get deleted and removed.
Crazy.
So, and that's knowing the credit repair laws. I spent a lot of money learning about credit, and
Mhm.
then also sitting down with attorneys, doing Skype calls like this,
Mhm.
just learning about the laws in order to, what holds up in court, what doesn't,
Yeah.
why this letter is better than this letter, why we won't get any pushback. This will be a slam dunk case.
Mhm.
So there's a lot of different, behind the scenes work that goes on.
Yeah, yeah. I've worked with a few credit repair people over the years, and I've had some friends and family that have done it. Nobody has ever been directly connected with attorneys and lawyers who actually work with them on their behalf. And then you got people like, like what are some of those big brands, right? Lexington, and people like that, where they say they are a legal entity and they have lawyers, but you never know behind the scenes if they really do, right? But
Yeah.
but yeah, you
Yeah.
do a good thing, man.
They're not even a law firm, Lexington Law.
That's
I'll
what I
call them
thought.
out
I
right
know.
now.
Yeah, and they have law in their name, and they're not even a law firm. Like that's what I'm talking about. It's a lot of smoke and mirrors in the industry.
Yeah, it's like, if you call yourself a wealth coach, you have to have some form of wealth generated,
Sure,
in order to even call yourself. I
sure,
would I would assume.
sure,
You know?
absolutely. Yeah,
But yeah,
it's like you got to practice what you preach, for sure.
yeah, and
Yeah,
there's a lot of different. It doesn't matter what industry you're in,
yeah,
you're going to get those people who are just,
of course.
it's crazy. But yeah, I mean, as far as taking these companies to court, we specialize in that because, I've been there too. I've had multiple charge offs. I've had multiple collections on my account. I paid somebody $700 to fix my credit upfront
Mhm,
cash.
mhm,
No questions asked. I didn't
mhm,
sign anything.
mhm,
And then, no communication, no results after 9 months.
mhm.
So it's frustrating.
Yeah, yeah, for sure,
It's
for
frustrating.
sure. Well, let's do this. Let's chat a little bit about the credit stuff, and then let's transition and talk about some of the wealth stuff and wealth creation, and maybe some investment stuff that we can chat about. If you could give me, if you can give me like a 5-step blueprint, if somebody came and said, man, because I got a lot of clients that they got money, but maybe because of a divorce or maybe because of a bankruptcy or something, their credit is just horrible, right? So if you
Yeah.
can give me like a, I don't know if you have a blueprint already built, but maybe a 5-step process on what to do, what steps to take to go from sucky credit to perfect credit, almost perfect credit, or at least hitting the goal that you want if you want to get a house or something like that. Kind of walk us through a little bit of that real quick and give
Yeah.
us your knowledge. Drop some bombs on us.
So credit
Actually, I
is
probably shouldn't say the B word because of everything that's happening right now. So I retract that statement. Drop some gems, guys. I'm sorry. Drop some gems.
yeah, dude. You got to be careful what we say nowadays. Isn't that crazy?
Crazy. Crazy.
Yeah. So credit is one of those things that to learn it's a skill. It's not something that you inherit. You can actually take a bad credit score and literally within a couple months you can boost it up to an 800 if you have the right resources. And I'm going to share that really quick. So you mentioned 5 steps.
Yeah.
If you look at your credit score, it's a 3-digit score. There's actually thousands of data points. And I think we went over this last time. There's thousands of data points that make up your credit score. So if you pay your bill on the 13th, that's a data point. If you pay your bill on the 18th, that's another data point. If you apply for something, that's a data point. There's thousands of data points that are compiled into 6 factors. Those 6 factors are what make up your 3-digit credit score. So just to kind of reverse engineer, thousands of data points calculated to 6 factors that calculate a 3-digit credit score. So the number 1 factor is your payment history. You got to make sure you have 100% payment history. One late payment can cause your score to go down 50 to 150 points. So if you are in that category of you have a late payment, well, you need to challenge that and try to get that removed. Right. So step number 2 is looking at and you can look at your report through Experian. You can go to annualcreditreport.com. You can look at Credit Karma. There's a lot of different free apps you could just take a glance at. So your second largest factor is your credit card usage. So how well you pay your bills on time. Do you carry a balance? These are very, very important in the eyes of a lender. So if you're going to apply for a house or a car, they're going to look at how is this person managing their credit card debt. If you don't have a credit card, that is a major red flag for a lender. So a lot of people that come to us, they say, I don't want a credit card because I don't want to deal with it. I was like,
well, that's what Dave Ramsey says.
Right. I understand that, Mr. Dave, but like part of 30% of your score is calculated on if you have a credit card.
Let me just stop you real quick. Back in the day, we went through with our church, Financial Peace University, Dave Ramsey's program. And part of the ceremony at the end of that is people literally cutting up their credit cards live in person. And I always said to myself, it just doesn't feel right. It doesn't seem right. They're probably doing more damage to their credit than they could ever imagine because they're paying it off to a zero balance. They're cutting it up. You need credit to survive in this world. There's no way around it unless you're just a multi-billionaire and you have cash for everything, right?
Yeah.
Most people aren't like that,
And this brings me to another good point too, because I've argued with people on social media, in person, about their credit card debt. No, it needs to be at 10%. It needs to be at 0. I pay all my bills to 0. Think about this. When you get a credit card, you are an asset for that company. So if you go buy a rental property, that's your asset because you're generating income every single month. That is you to the credit card companies. They're generating income for you every single month. If you don't have a renter in there, you're not being compensated. So if you're not using your credit card at all, they're not going to reward you in your credit because you're not using it. So if you have a 0 balance month after month, your score cannot increase because you're not having payments on there and you don't have any revolving balance.
Crazy.
So that's from the lips of the people that work at FICO. They said that we reward people even if it's $1 on their credit card debt.
Nuts.
So
they reward you for being in debt. They reward you. They penalize you for being out of debt, right?
Correct.
With one of my situations, we paid off a car loan in full. We've been paying on it for 5 years. We paid it off finally. I was so excited, and then my credit drops 50 points or whatever. I'm like, how is that and you were telling me it's because of the history attached to it. Now that doesn't count, right? That's the craziest thing to me. Like, you're supposed to pay off your car loans and your home loan. You're supposed to, but then you get penalized, and then you got to take another however many months to build that back up. It's the dumbest thing ever.
It's because the system of finances that we're in, you're rewarded for having debt. I look at, these major players like Grant Cardone, Robert Kiyosaki, they borrow debt. Our industry, our life revolves around debt. Look at the banks. They're lending out money every day. It's all based on debt. So instead of like trying to buck the system, instead of trying to go around it, like play the system in your favor. And one of the things that I share with people is your credit card. Most people don't treat their credit card the way they should be doing it. So they wait, they go buy something, they buy something else, and next week they buy more stuff, and then they make the payment 30 days later. You are playing into the hands of the credit card company.
Yeah.
Whereas if you treat your credit card like it's a debit card, you'll never have to worry about getting into debt.
Right.
You'll never have to worry about when's the statement date, when's the closing date, when's the due date. You just, every time you buy something, the next day when it posts,
pay it off.
Pay it down to $2.
Right. Because you want to keep something on there, right?
Exactly. Gotcha. So what you're doing more importantly than anything, Mark, is you're creating a good habit of, I can't go get that new TV because I don't want to put it on my card because you know what I mean? I don't have the money in my account. And that is creating a good habit for yourself so that you won't get your credit cards out of hand. Also, credit cards give you reward points. So, and reward points are not even taxable income.
Ah, gotcha.
So I have the Fidelity credit card.
Like a hack. That's like a hack. It's money that you don't have to pay taxes on.
Exactly. So check this out. I have the Fidelity credit card. I get probably $100 to $200, maybe $250 a month in reward points, cash. That money is then transitioned into my IRA that I have set up for me and my wife.
Nice.
So I'm getting free money that is now compounding into the market. And so when I'm 65 years old, I'm probably going to have $500,000 in there. And it's money that will never be taxed. It's crazy.
That's guys, if you missed that, rewind this if you're watching the replay. So you just said you have a credit card that gives you like 2% cash back or something like that, right?
Yep.
How much is it cash back? Do you know?
It's like 2%, 2.5%,
right? It's average 2%. Some have more, some have less. So at the end of the month or at the end of the year, you get paid. Usually monthly, right? Yep. So at the end of the month, you get tens of dollars or hundreds of dollars. You said that goes where? It goes into a separate account or it gets transferred right from your credit card?
It goes to my credit card account, which I have. There's a checking account in my credit card.
Okay, so it's a credit card plus a checking. And who is it again? Who's the company?
Fidelity.
Okay, so Fidelity.
And I'm not an endorser for them, so.
Of course, gotcha. No affiliation, right? So it goes, you get the cash back, goes into your checking account, and then you do an auto transfer into an investment account.
Charles Schwab.
That money is never taxed, right? And is it a Roth IRA that you're putting money into?
Yep.
So it's technically after tax dollars, but really, you don't get taxed on that. So it's going into a Roth, and then it grows for the rest of your life without getting taxed, bro. You just might have cracked the code, man. That's I've never heard of that before.
And so this is also what I wanted to share with you too, Mark, is this is where your services come into play as well. So if you're doing what I'm doing, instead of investing into a stock market or the S&P 500, which I have, is you can take that $200 a month and you can fund a policy with Mark. Sure. So it's money that you're not missing because you never had it to begin with, but you're funding something that if something were to happen to you, your family is taken care of. And then also you can leverage that, right? To be able to take that out. If you want to go buy a house or buy a car, you can use that as leverage without compromising the principal in there.
Totally.
And so
my two favorite accounts is a Roth IRA and a cash value life insurance policy. They both function the exact same way. It's after tax dollar, tax deferred growth, never to be taxed again when you use it, right? But you can also, buy cars and houses and all that stuff with it. Those are my two favorite places. The only difference is the Roth is exposed to risk. The IUL cash value policy or whole life is not exposed to risk. And it includes a few other benefits, death benefits, living benefits, long-term care, all that stuff. So like they're both beautiful policies. If I was going to do anything, I would do a Roth, right? If I wasn't in life insurance and I didn't know what I know, I would do a Roth, because why would I want to pay taxes later when I'm 65 years old?
Yeah.
It boggles my mind how many people think they're saving money now by not paying taxes when the tax rates in a few months are expected to expire and go up unless the Trump administration does something, right? So taxes are the laws are supposed to sunset and the tax rates are supposed to go up technically. Now, that's probably going to happen for the next 20 years.
Yeah.
Taxes are going to be way higher in the future than they are right now. It's almost inevitable, So wealth hacks, man, I love it.
This is the importance of having, when I followed a bunch of people on social media, I was listening to Grant Cardone's advice. I was listening to Ed Milet. I was listening to Dave Ramsey, and you get so much conflicting information.
Yeah.
And, imagine if you went to a Catholic church on Monday, a Christian church on Wednesday, and a Muslim church on Saturday. Like how are you able to function? You can't.
Sure. Yeah.
So what my mentor told me years ago is focus on maybe one or two at the most people that you believe in and that you can just harness all of your energy towards. And when I did that, I hyper focus my life in all the areas that we talked about, and my life has never been the same. So what I'm trying to say is whatever Mark is saying, he's doing himself.
Yeah.
And he's teaching it to other people who are doing it. And he has the fruit on the tree. So tie into what you're saying.
Yeah. Yeah. Whenever we bring new agents on, one of the things that we do an orientation, right? So one of the things we talk to them about is being a product of the product. Like you can't sell this, you can't advertise this to people if you're not doing it yourself. And if you're not willing to do it yourself, then this is probably not a good fit, right? And it's like one of those things, like we're not forcing them to do it, but number one, it's going to protect them. Here's what happened. We've had a few agents in the past who've come on. They've never gotten life insurance for themselves, but they were preaching it. 6 months later, they had a stroke, heart attack. They almost lost everything. They almost died, right? They couldn't work, right? And then we had other people who got life insurance 6 to 8 months later, had a heart attack, stroke. They were able to pull from their death benefits, pay their mortgage, put their kids through college. It was like a beautiful, happily ever after type of scenario, right? Yeah. And then we've had people, not in my personal team, but with companies I've worked with. We had one guy, brand new, 6 months in, never got a policy for himself. They went on a business trip, a company trip to, might have been Cancun or Hawaii, one of those places. They went hiking. He fell down a cliff, died, and his family was left with nothing.
Oh my God.
Life insurance agent left with nothing. It's the craziest thing in the world, but you got to practice what you preach. And again, I agree with what you said. There's so many gurus out there, so many people, so much information. Take one or two people that align with your values, your beliefs, your morals, and super focus on what they're saying. Because if you listen to too many people, you're going to be all over the place. I've went through the same thing years past, right? You're listening to so many people that you're like, I want to do this and I want to do e-commerce and I want to do, you try to do everything and then you do nothing. You get paralyzed, right? So that's a good statement. Yeah.
Yep. And so that was the first two. You said, what are the 5 steps?
Yeah. What are keep going.
I mean, I have something else I want to share with you too.
Yeah, for sure.
On that, and I want to compare what you do with an idea.
Yep.
But so that's step number 2. Number 3 is if you have derogatory items, you have negative items. I mentioned like the late payment. You want to dispute those, get those removed, and you can either write letters to the credit bureaus yourself. You can either contact the CFPB, which is the Consumer Financial Protection Bureau, and so you can dispute those items that way, or you can hire a company like myself or somebody else. But I've seen people with a 780 credit score, 800 credit score, and they have one blemish, and you can actually get denied for auto loans, mortgages, with those derogatory items, even though your score number is there.
Right.
So what's very important is understanding the profile that you have versus the score number that you have. And then also, you want to make sure you have at least 10 total accounts. So what does that mean? A lot of people that come to us, they have a thin profile, Mark. So they don't have a credit card, they don't have a mortgage, they don't have an auto loan, they're almost credit invisible. And this is actually challenging too, because that's more high risk than people that don't have any history.
Sure. Because it doesn't show responsibility, doesn't show, history. Yeah, I get it.
Like if I go on I'm married now, but if I go on a date with a girl and she's like, I'm 20 years old, I've never been on a date before, I'm going to be like, okay,
yeah,
why not? You know what I mean? Hold on here.
Yeah.
So it's a big red flag, right?
For sure. Yeah.
So you want to have some sort of depth to your profile.
Right.
You can add on an auto loan. You can add a trade line onto your account to boost your score. You can add your rent payments to help boost your score. There's Experian Boost, where you can report your phone bill, right? So these are all getting accounts on your profile, and that'll help boost your score as well. But you need at least 10 total accounts.
Guys, okay.
And then another thing is inquiries. You can dispute those over the phone. But yeah, those are the basics. Make sure you pay your bills on time, put on auto pay, have your credit card debt as low as possible without being zero, get rid of your derogatory marks. And then, making sure you have a beefy profile so that a lender would be, okay to lend you a couple $100,000.
Yeah. That's good stuff.
Does that help a little bit?
Yeah, it helps a lot. If you could give us 3 unknown hacks that you've learned over the years for people to just instantly get a good boost or something like that. Give just a couple little, like, hey, you may not have known this, but you can scenarios.
Yeah. So as I mentioned with the thin file, I had a client. He had a 0 credit score. He didn't have he came here with nothing, and he was renting his apartment for like 5 years. And I said, bro, go get a secured card. You need to have some kind of credit card. Go get a secured card.
That's where you put a deposit on, and then you just use it that way, right?
Yep. So go to your credit union, put down $200. They'll give you a credit card with $200.
Gotcha.
You can leverage that. Boom. And then also Rental Karma. So Rental Karma is a company where they will backdate your rent payments for as long as you've been living in that apartment, and then they'll get them caught up. So then you could pay month to month as well. And so he backdated 5 years of payments, and he also started, from the month that he got started paying there too. So he went from a 0 credit score to a 720 in literally 30 days.
Crazy.
He did those steps. He applied it. He did exactly what I mentioned to him, and boom, he was rewarded.
That's awesome.
So that's just 1 or 2 things there. For as far as like increasing.
I know one. If you're young, you can ask your parents to be an authorized user as long as they have good credit, right? You can be an authorized user and you get all of their history. Is that true?
So yes. So this is you need to do this for every one of your kids, and your parents should do this for you. Now, even if somebody, like, let's say, Mark, I come to you and I say, Mark, you have a credit card you've had for 15 years. Will you add me onto that card? You don't have to give me the card. I just want to inherit that history. You can even have a bad credit score, but I'm only going to inherit what's on that credit card that you have.
Gotcha.
So I'll inherit those payments. I'm going to inherit your credit limit and your credit age. So we've seen people do this. When my mom did this for me, my score went up over 120 points.
That's awesome.
Literally 30 days. And so the longer that find somebody who has a card they've had for the longest, that's going to make your score go up even higher because of the payments and the history on there. That should be known in society because it's an ultimate way to help your family.
Yeah. My dad did that for me when I was like 18, and I was able to get, within 30 days, I was able to get a loan for a car that I would have normally, they would have laughed me out of there. So, but I had a 700 plus credit score. It was a beautiful thing at that young age,
Yeah.
But yeah, that's awesome, man. Do you have any type of lead magnet PDF downloadable that people can have access to, that we can maybe leave a link in the description of these videos?
I do. Yeah. I will send that to you. And
unless you want to direct them to a website or something. Do you have a website that you want to send them to?
You can go to my website, and when you fill out a consultation for a free free phone call,
Yeah.
you actually get an email, and in the email is my actual. It's just a PDF. It's like 7 to 10 pages, and what it is basically the 6 factors to your credit I'm going over, and
Gotcha.
giving you tips and whatnot on how to understand your profile.
Cool. And that's limitless.credit.com.
It's limitless-credit.com.
Dash credit. Okay,
Yep.
dash credit. Gotcha.
Yeah, or you can go to
Limitless dash credit. Let me just put this in the banner real quick, and then we'll let it roll across the bottom of the screen. And then if you guys just go on his website and you just fill out the form that's on the website, you should see it right there. Limitless-credit.com. You'll
Yep.
get like a little cheat sheet PDF type of deal.
Yeah, it's a little ebook, nothing
Okay,
nothing
cool.
crazy, but I put
You
it
do free
together.
consultations and whatnot.
Yep.
Awesome.
Yep.
Super cool. So make sure you screenshot that, guys. Fill that out if you get a chance. Trust me, I've known Austin for quite a few years. Actually, we've been following each other on social media, and I trust this guy with my life. So, and I don't say that lightly. So,
Amen.
good. What else is on the schedule, bro? What's on the agenda? What did you want to ask?
I wanted to go over a little bit of information about your policies too that you write for people, and because every policy I'm sure is unique, right? It's not just like when I sold life insurance, it was like, okay, this person's either getting American Amicable or they're getting a Gerber policy. Like those are the only two that I could do, but you're really able to tailor make a specific policy based on their income level, their goals. And there was a couple of things that I've been preaching for years. So there's a bank product called a CD, a certificate of deposit. If you guys don't know what a CD is, if you can go to a local credit union, let's say you have $1,000, you could put $1,000 into a CD, which is a certificate of deposit. They will give you 3% or 4% in 6 months or 12 months, however long you choose for the CD. So what I used to teach before I discovered what you do, Mark, what I used to teach is, hey, if you have cash to go buy a car, why would you take that cash and go buy a car? You'll never see that cash again. Yeah, you'll have the car, but the cash is gone. So let's say you have $10,000. You're going to go buy a used Camry from the store. You, instead of going to pay 10 grand for the Camry, go put $10,000 into a CD, which is going to give you 4% over the course of a year, let's say. So of the 10,000, you'll get $400 back, plus the 10,000 after a year, right? So you'll get back 10,400. What you can do with that is you take a loan against the certificate of deposit. So the bank says, okay, this money is 10,000 here sitting here. And you're going to have a better way of explaining this. I know you will.
Yeah.
So the 10,000 is sitting in your CD. You take a loan against this 10,000 for, let's say, 5%.
Sure.
So you have to pay the bank back 5%, but you're getting that loan to go buy that car. Now you drive away with a vehicle and you're making the monthly payments to the loan, but after a year, you're going to get the full $10,000 back plus 400, plus you're going to have your vehicle. So really, you did not lose much here other than the small percentage the bank has loaned you. So that is what I was teaching people for a long time, because it's kind of like a secret hack that you can use instead of, because Dave Ramsey says pay cash for everything.
Yeah.
Well, now you lost your principal, which is the cash. So then here comes in life insurance, where essentially you can do the exact same thing on steroids, right? Am I wrong?
Correct.
So can you go into depth about how to do that? Because my mind was blown when I realized you're doing the same thing, but a lot more efficient.
Right. Yes. So there's a couple different forms of life insurance. You have your term, which is your temporary insurance. It goes from 10, 15, 20 to 30 years. After 30 years, it expires and you're left searching for new insurance. By that time, maybe a health condition arose and insurance is going to be through the roof at that point, right? If we get a policy when we're 30, it's going to be 60 years old, we're going to have to look for a new policy. The prices are going to be probably triple, quadruple of what they were when we were younger, right? So term doesn't build any equity. There's no cash value growth. There are certain term policies called ROPs, return of premium, where you can get your premium that you paid into it back at the end of that term, whether
Nice.
it's 10, 15, 20, or 30 years. That's like a forced savings account, but the money doesn't grow. It doesn't compound. There is no interest. You just get back what you put in, essentially. That's good for some people if they're just looking to put money away and just kind of hide it for a long period of time.
Yeah.
Then you have permanent insurance. Permanent insurance is broken up of several different types underneath that umbrella of permanent. You have whole life, which is like the OG, right? Everybody knows whole life. It's been around the longest. You pay the premiums. It lasts until you're 100 years old. It builds cash value. It has death benefits, living benefits, and you get to loan against it as well, right? Whole life, participating whole life specifically, if you go with a mutual company that's not corporate, it's not like public, it's mutually owned.
Yep.
They do what's called dividends, and they give you dividends back at the end of the year. Really, a dividend is just like overpayment of premium that they didn't use, and then they pay you back, right? So they invest dividends. You can reinvest it into your policy. On average, you'll earn between 2 and 4% on a whole life, and it's kind of like that's it. It's just static growth. It's like a CD. It's the closest thing to a CD, okay? In a whole life policy, you can put what's called a front load in. Front load in is that 10 grand, that 20 grand. I want to dump it in the very beginning. But unlike a CD, you have to keep funding it for a certain period of time. It's usually 5 years to 10 years, generally speaking. You got to fund it for a certain amount of time in order for it to last your lifetime. Mm-hmm. After you're done paying into it, it's called either a 10 pay or a 20 pay. You pay into it for 10 years, and then you have it for the rest of your life. You pay into it 20 years, you have it for the rest of your life. What's the benefit of paying it longer? You get more money in there that you can borrow from. Okay. Whole life's good in certain scenarios, but it's a little older. Then you have IUL. Universal insurance came out around the 70s. UL came out, which is kind of just like a form of permanent that grows with a fixed interest rate. Believe it or not, universal insurance, not index, but universal insurance is fixed as well, just like a whole life is, but it's like 2 to 3%. It's just, right. It's slow growth. It's not really made for large dump-ins, lump sums, but it's more for flexible premiums. You could kind of shift your premiums around a little bit. Whole life, very not flexible. It's like rigid. Once you set your premium, you can't really touch it, right? You can overfund it a little bit, but it's very, very rigid. Universal is made for flexibility. You can increase it, decrease it. You can increase your death benefits, decrease your death benefits on an annual basis, but it's not meant for cash value growth. Then a few years later, IUL came on the scene. Here's the backstory of IUL, Index Universal Life Insurance. A guy named, I just went blank. Who forgot the guy's name. It'll come to me in a second, but he was like a banker, Wall Street guy. He wanted to, have the safety and security of the banks and the life insurance policies, but he still wanted the volatility of the market, the upside potential of the market. So he bridged them together. He proposed this idea. Life insurance companies grabbed a hold of it, and that's where they came out with IUL, Index Universal Life Insurance. This is a permanent policy where you put money in. You can also put front loads or lump sums in. It will grow in accordance to the market. There's several different indices. You got the S&P, the NASDAQ, Credit Suisse, BlackRock. There's a whole bunch. Each carrier has a different set that you can peg it to. Now, the cool part is there's caps and floors. Some strategies are uncapped, so you can have unlimited growth, but there's spreads involved. It's a little complicated to explain in a short period of time like this. It's an advanced product. But what we typically deal with is S&P 500 and some of the bigger known ones, the NASDAQ, the Barclay. Any money you put into an IUL, you can allow it to earn interest based on the performance of the market during that 12-month period. So if the S&P goes up 10.5%, you can potentially gain that percentage in your policy minus whatever the cost of insurance is, right? Because you got to pay for the insurance in the policy. Why do you have to pay for insurance? To allow your money to grow tax-free, the IRS has certain rules and regulations we have to follow, right? So you can put money in, it grows tax-free or tax-deferred technically, but you never get taxed on it because of what we just talked about with the whole CD thing. When you have money in that policy, and it has to be set up the right way, low death benefits to minimize the cost of insurance eating away at the cash value. So you kind of squeeze down the death benefits as low as possible, and you put in as much money as possible. But you can essentially take a secure loan from that money that you already put in there, and you can go ahead and use it. Loans are tax free. You can't get taxed on loans. So it's very similar to what you're talking about with the CDs. Now, here's the cooler part of the IULs is that money in there is still going to grow based on the market.
Right.
Even when you took that loan for 10K out and you went and deployed it to buy a car or house, down payment, you still have the money in there earning interest based on market performance as if you never touch it. That's what we call uninterrupted compound interest.
That's
right?
awesome.
So you put money in, you can take money out, but that money stays in there and it continues to earn as if you never touched it. Then you can decide to pay yourself back unrestricted. You can wait years to pay that loan back, which is fine. It's an unrestricted loan. I think it's called unrestricted, but it essentially just means you don't have a payment plan. You can pay it back whenever you want, or you can pay it back in one lump sum, or you can pay it back monthly. Okay. When you pay it back, you do pay an interest rate, right? I have gotten one of my loans is as low as like 2.5%.
It's so low.
It's traditionally a lot lower than banks because they're playing with their own money, right? So I had took a loan out from one of my cash value policies, 2.5%. We paid it back. But when you pay it back into your policy. So you're essentially creating your own. This is where we call privatized banking or infinite banking. You're creating your own banking system where you can put money in as a deposit. You can take money out as a loan. You can pay yourself back and the interest goes back into your policy. Okay. One step further, I don't want to throw a wrench in this, but just so people understand, you're not literally taking a loan from your cash value. You're really taking a loan from your death benefits.
Correct.
That's why they're able to keep the growth happening in your cash value. And when you take that loan out, you're not going to see your balance decrease. If you go take a loan out from your 401k today, $10,000, your balance is going to go down $10,000, right?
Yeah.
So the difference is you got two mechanisms working for you at the same time. When you take a $10,000 loan, they're going to borrow it from the death benefits because it's just sitting there doing nothing, collecting dust. And then when you pay it back into the death benefits, and that interest goes back into the general fund of the life insurance account. So you just created your own banking system. This is how the Rockefellers did it. This is how the Rothschilds did it. The Warren Buffetts of the world, Carnegie's did it. They all practiced this method. They did it with Whole Life, which Whole Life is a great product. I have nothing bad to say about it. I'm kind of a whatever fits the client is what we use.
Yeah.
I've set plenty of clients up with Whole Life because they wanted the guarantees. They wanted the fixed rate of return. They wanted the dividends. But then I have some clients that say, I want the potential upside. I want the bigger growth potential.
Yep.
And me personally, I don't know about probably 90% of the agents out there don't have access to what I have access to. I have an IUL carrier that will waive all surrender charges. So IULs have something called a surrender period. It's usually like 10 years. If you cancel your policy, you get penalized, right? Whole Life doesn't have that. IULs do. So that's one of the biggest haters come and say, oh, it's got fees and it's got all these extra things. If you ain't canceling your policy, that fee is meaningless. It doesn't mean anything, right? So just keep your policy long-term. But so I have an option with a carrier where I can waive the surrender fee and give the client up to 90% access of whatever they front load into an IUL. I'll give you an example. I have a client, I'm working on a policy right now for a husband and a wife who are business owners. They make couple $1 million a year with their business. They're putting in $100,000 into their IUL per year individually. So $200K per year going into two different policies, 100 for him, 100 for her. Within 30 days of their policy being approved and their money being deposited, they're going to have access to about 85 to 90% of whatever they front loaded into that policy. The guy is going to pull that equity out and he's going to go buy stuff for his business.
Yep.
He's going to use the IUL as a capital investment account, and he's just going to keep recycling. He's going to pull it out, use it for his business. The profit he makes for his business, he's going to pay it back within 30 to 60 days. Pull it out, but at the same time, that money's earning interest. It's compounding. It's growing. By the time he's 65 years old, he's going to have $10+ million in there just generating. The interest alone will be hundreds of thousands of dollars per year.
That's awesome.
And so that's what we do with life insurance. And again, I'm a kind of holistic guy. If you need term, I'll sell you term.
Yeah.
I'll practice what Dave Ramsey preached: buy term and invest in difference. Cool. I have no problem with that because I believe in investing. I believe in IRAs, Roths, mutual funds. I believe in it.
Yeah.
But I also believe that there's a place and a time where cash value life insurance policy is probably the safest place to put money if you want to avoid any type of financial crisis like a market crash.
Mm-hmm.
This client that's putting hundreds of thousands of dollars in there, if the market were to crash tomorrow and go to -50, he won't lose a penny in his policy.
Right.
There's still going to be the cost of insurance he's going to have to pay, but he knows that he's a business owner. He needs the $1.4 million in insurance anyway.
Yeah.
Whether he does it with the policy that we're creating or he does it with another company and buys a term, it's still going to cost him thousands of dollars per month to have that $1 to $2 million worth of coverage, right? Or hundreds of dollars per month, right? So either way, he's getting 2 for 1. He's getting the death benefits to cover his family, his kids, and part of his business, and he's getting this crazy compound interest capital investment account that he can put money in. He can take money out. He never has to pay taxes. And when he passes away, millions upon millions upon millions of dollars will go to his heirs, absolutely tax-free. Life insurance is the only plan on earth where you can put money in after taxes. It grows tax-free. You can use it tax-free, and then it goes to your heirs 100% tax-free. It's crazy, man. People have been using it for hundreds of years. You and I are just starting to learn about this over the last 10 years, 10, 15 years.
Yeah. I mean, and I'm teaching my father some of this stuff.
Yeah.
And he was like, man, Austin, he's like, he felt bad. He was like, I wish I would have learned this to teach you guys when you were younger. I was like, we didn't know.
Didn't know. You don't know what you don't know. You can't get it
in school. You don't learn this at any college. Typically, you'll go into, and you don't learn it at the dinner table.
Right.
You just don't. I want to ask you one question too.
Yeah.
How many people, or can you even, if you don't, let's say you take a loan against your policy, do you have to pay that back?
Yeah, good question. So I probably should have mentioned that as well. With life insurance, okay, the way that it works is because it's your money, it's your capital that you're utilizing, you're using it as collateral inside your policy. You can take a loan out and never pay it back, essentially.
How is that possible?
Well, because here's what happens. Remember those 2 mechanisms that I told you about? You have the death benefits and then you have the cash value. Let's say we got $100,000 in the cash value. Your death benefits are probably $200,000 to $300,000. You can take $100,000 out and never pay it back. Here's the caveat that most agents will never tell you. There's still interest accumulating on that loan. Okay. That interest is going to compound. So at least pay back the interest. If you're not going to pay back the principal, at least make interest only payments. Because here's what happens. If the interest accumulates to more than what's available in your cash value, that's where the policy will lapse and kind of implode on itself. So as long as you're just kind of casually paying off the interest, you cannot pay back the principal as long as you want. When you pass away, here's how the carriers get their money back. They'll just deduct the loan from the death benefits. So instead of $300,000, your family will get $200,000, and that will satisfy the loan. There's no taxes due. There's no penalties due. The loan is satisfied, and your family still gets a portion of the death benefits. So that's what some people do. This is called the buy, borrow, and die method, right? Wealthy people do this. They'll buy assets. Let's just use life insurance policy. You'll buy a life insurance policy. You'll borrow from it. And at the end of your life, when you pass away, the asset will pay back itself in the form of death benefit, and your family won't be on the hook for any type of debt, any type of loan, or any type of taxes. Buy, borrow, and die method. Some people do it with real estate. Some people do it with the stock market. You can do it with a lot of different things. Life insurance is one of the ways they do it. And when you think about wealthy people, why do wealthy people need life insurance? Dave Ramsey says when you're wealthy enough, you don't need life insurance. Well, Austin, if I had tons of real estate and tons of businesses and tons of land, and I had assets that I was going to pass down to my family, my family's still going to have to pay taxes on those assets.
Mm-hmm.
They may even have to pay taxes on the difference in where I bought it from to where they bought it. Now there's certain things like step up in cost basis and stuff like that we can't go into right now, but they're still going to have to pay something. Millionaires and billionaires have used life insurance, not for the death benefits because they're taken care of, but they've used it to pay the estate taxes, to pay the inheritance taxes, to pay the other taxes that are owed at the end of their life, so their family is not left on the hook having to pay those taxes. So it's a kind of like a tax strategy as well. A lot of people don't realize that.
Yeah. So like if I die with a couple $1 million in mansions, and then my kids can't pay the taxes on those mansions,
there you go.
They're going to get yanked out from under them, right?
Of course, they'll get taken. You don't own your house ever, bro.
Yeah.
Listen, even when you pay off your mortgage, you still don't own your house because if you don't pay your taxes, what happens? Tax collector.
Crazy?
Is it? If you let's say you pay your taxes, you paid your mortgage, and you don't pay the HOA, what happens?
Gone.
HOA comes and takes your. Bro, you never own your house unless you become like this whole national, whatever they got going on. You know, the people that become not citizens but nationalists or like sovereign citizens. Then you could like mess with the trust and the land, and then you could essentially get it into your own name completely. But then that's a whole nother world. We could talk about that another time.
One more question I wanted to ask you too. So my my in-law, when she passed away, she didn't have any life insurance. This is my wife's mom.
Gotcha.
And she had a check. I think it was like $15,000. We had to fight. Creditors have access to it first, and then we had to fight these attorneys. It was just a nightmare dealing with the 15. At the end of the day, my wife was like, it wasn't even worth the headache.
Yeah.
You know, so is life insurance also a protector from maybe creditors, or, you know, because I deal with that all the time with people with creditors chasing them, garnishments, judgments, liens against the property. Does that ever come into play?
Yeah, that's a great question as well. Life insurance is actually a probate and creditor protected asset. So when it gets paid out to the family, no creditor can come after the family for that money, specifically life insurance. Now, on another note, just to take it a step further, and maybe this could be a second episode that we can talk about estate planning, trusts, and wills, right?
Do you do that as well?
We do. We just opened up a branch of our business where we actually can write a fully compliant revocable living trust in your state. It's state specific, but we have a software that we use that actually hard codes the state law and all the compliance things in the background, so that all you got to do is type in your address and everything's written in Florida state law. And then all you have to do is fill in the boxes with prompts, right? Who do I want?
That's unbelievable.
It's super cool. Super cool. So we just started doing that. Here's number one thing I want to say. I'm sure your mother-in-law may have had a will. Do you know if she had a will?
I don't remember.
Okay, a will can be as simple as a piece of paper that you scribble some writing on that you want your kids to get this, or you want this to go to this person, that to. A will not avoid probate. You guys must have experienced some sort of probate, right?
Yeah.
They take the asset. It's an open book for creditors to come in and snatch as much as they want. There's litigation. You got to pay legal fees. And then whatever's left over, the crumbs will go to the family, right?
Yeah, it's crazy.
That's probate.
Criminal.
Every state has probate. If you don't have your assets protected, your assets, we're talking cars, homes, bank accounts, investment accounts, money, it will automatically go to probate, even with a will. Here's the biggest misconception. I have a will. I'm completely okay. No. If you have a will, that's probably a guarantee that you're going to go to probate.
Yeah.
If you have a trust, that's where setting up a family trust, it's a couple $1,000s. You pay it one time. You never have to pay anything else again. You set up a trust. Your will goes in the trust. All of your assets get funded to the trust. The trust is the beneficiary on a lot of your assets. And then even if you have like paintings or just money in a bucket out in the backyard, you can still write it in your will and it's protected under your trust. Anything in your trust will be completely protected from probate. And then at the end of your life, creditors and lawsuits. Now, we can go one step further. I know we got to go pretty soon. We got to go pretty soon. We're going into the rabbit hole a little bit. A revocable living trust will not protect your assets from creditors or lawsuits while you're alive, because you technically still own them inside of a revocable living trust. But there's another type of trust that as you get older, you can convert, or you can start what's called an irrevocable living trust. That means that your trust literally owns your assets. You do not own anything. So if law comes to you trying to sue you, creditors trying to, I don't got nothing. There's nothing in my name right now. It's in my trust name, and they cannot legally penetrate that document. So a revocable living trust is probably only good if your estate is done, is never going to be changed. Like if you have $10 million in the bank and you know you're not going to touch it, put that in an irrevocable tongue twister, irrevocable living trust, and allow your trust to own that so that it is taken and removed from your estate. That's the only way you can avoid lawsuits and probate and creditors, is with an irrevocable. Now, there's different ways that you can do it, and there's guys on the internet, I'm sure you've seen them before, open up a trust and then have the trust own a holding company, have a holding company own the LLC, and then there's like different layers of setting up your structure. It's probably, I'm not the best guy to talk to about the many different layers, but I can help you with the very beginning. I can help you with the basic steps, the ABCs, right? And then we can get into some other stuff later. But man, it's a whole world out there. When you start learning, it will blow your mind what's available to people and what resources are out there. If you have researchability and you have a little bit of like common sense to look for that information, or to get connected with guys like you, or to get connected with guys like me that at least get you over the hump so that you can find more people. The world is unlimited. There's unlimited access to information, man. I'm just so tired of people just sitting on their couches saying, I don't know how to do it, so I'm not going to do anything. Like, get off the couch, go figure it out, go watch YouTube videos, go contact us, have free consultations. At least it will give you a little bit of information, you know?
Yeah. And that's one of the reasons why I like to go live is, you can fake it to make it on a video or a reel, which a lot of these guys are doing on social media. But for you to ask questions in a live environment, like if I don't know the answer, I'm going to tell you, look, I don't know.
Yeah, exactly.
Like I would rather be transparent and honest. And I think transparency is really is the new currency, like just being open and honest and just being real with people. Because in a world of social media, everybody's got something to sell you. Everybody's got something more important to do. But
totally.
Yeah, dude, I love the rabbit hole we went down, and I'm glad you were able to answer some of those questions, because I always wondered, a CD versus the whole life or versus the IUL. It always intrigued me.
Yeah. Yep. Now the question is, when we gonna get your stuff started? Come on, brother. Let's go.
I need to tighten up, man. Yeah, I have it bundled with my auto insurance. With everything.
Awesome.
I haven't looked at that or glanced at it.
Yeah.
And it's been a couple of years.
Again, make sure, guys, for everybody listening, make sure whenever you go and talk to an IUL agent, make sure it is low death benefits, high cash accumulation. You don't want an IUL with high death benefits. That's not the purpose of it. Low death benefits, and put in as much money as you can. I don't care if it's $200-300 a month. Put in as much money as you can and tell that agent, I want those death benefits squeezed down as low as possible. If you need extra death benefits, throw on a term as an addition for the next 30 years, right? Because at the end of 30 years, hopefully you'll have enough accumulated value that you can let that term go and you're still good. Does that make sense? That's the real buy term and invest the difference. You're buying term and you're still investing the difference, right? Just in a different way, in a different method,
So last thing real quick, is there ever anybody you've run into that where they say, hey, I want $100,000 policy. I'll pay, $10,000, let's just say $10,000 a month. Has it ever come to fruition? And what happens in that aspect? Is it canceled?
What do you mean? They want to do 100K. What? Repeat your question.
Let's say I say, look, Mark, I want $100,000 policy. If I pass away, my wife gets $100,000. I'm willing to pay $2,000 a month, for the next whatever many years. Yeah. Does it ever come to fruition where how much I've paid in has actually reached the death benefit?
Oh, yeah. All the time. In our illustrations, it's usually towards retirement that your cash value will accumulate at the same level of your death benefits. And here's a little insider information. By law, the carriers, the life insurance carriers, have to outpace the death benefits in order to keep it IRS compliant. So if you have 200,000 cash value and you're at 210,000 death benefits, the more your cash value grows, your death benefits have to outpace it by about 5%. So every year they're going to give you free death benefits. They don't charge you for more death benefits, but they have to do it to stay in compliance with the IRS. So I've had policies, we've illustrated policies where 400,000 or 500,000, they started with 150, 200,000, but by retirement, their death benefits are up near $5, $6, $7, $8, $9 million because they've put so much money in over the years. And here's the other thing that a lot of people don't know and a lot of agents won't tell you is, and especially for IULs, the longer your policy goes, the more cash value that you put in it, the less the carrier is going to charge you for the cost of insurance. I can illustrate. I can show you on the fee schedule of the IUL. Here's why. Because when you put more money in, they're shifting the risk over to you. You're now self-insuring yourself.
Right.
If you have 500,000 in your cash value and 600,000 in your death benefits, well, they're only charging you for about 100,000 worth of death benefits because you just self-insured yourself by 500,000. Nobody will tell you that.
Makes sense.
And all the agents out there that try to trash cash value and trash IULs, they don't even understand this. It's called a shift of the risk. And it's the whole, man, that gets me riled up.
That's why I love you, bro.
This was a good live, man. This was a good live.
Hey, sorry we went over a little bit, but if you guys want to reach out to Mark, you got it right there on the screen. He is very, very good. And what happened with Facebook? Did Mark Zuckerberg try to ban you from Facebook?
That's a whole nother live, man. We can talk social media strategy on our third episode. But yeah, social media, Facebook took me down. They said I went against community standards. But the weirdest thing is they took my wife down at the same exact time, the same minute, the same second. Both of our accounts went out. Wow. She's never posted about financial stuff in her entire life. She talks about Jesus and her kids. That's all. And her account got banned as well. So I've started some litigation against Facebook. I've reached out to some lawyers and attorneys. I've submitted some complaints to the FTC, the Better Business Bureau. I even sent a letter to the Attorney General. Not many people are doing anything about it. I haven't heard back from Facebook yet, but if I have the opportunity and there's any lawyers out there, attorneys out there that want to help me, the little guy, fight the big guy, reach out to me because I'd love to help, move this forward and take it as high as I possibly can. Even if I don't get my account back, I went on a Reddit forum and there are thousands upon thousands upon thousands of people within the last 2 to 3 months that has had that exact same thing happen to them as well, without any cause, without any reason, without any warning. Their accounts just got shut down. So there's something going on with the AI or something, but man, it's affecting my business. It's affecting everything. So,
and I only bring that up is because Mark doesn't have like 1,000 or 2,000 or 10,000 people on his Facebook. I mean, how many people you have on your Facebook?
Yeah, when I got shut down, I had 950,000 organic followers on my personal profile, bro. Not even a business page. Not even a business page. And it took me about 4 years, many viral videos later to get that. And that was my primary source of clientele, right? Lead generation. So now I have TikTok. 680,000. Probably within the last 3 weeks, I've grown about 50 to 60,000 followers on TikTok because I'm posting every day, 3 to 4 or 5 times a day. I'm going live. So I'm starting to build up that community again. Then we have YouTube. We've got about 23,000. So I'm kind of starting over, man. But, listen, if I can help anybody, answer any questions, reach out to me. I'm on TikTok. I'm on Instagram. I just started a brand new Instagram account, markcasera.legacy. And then my website, legacywealthco.com. And then you can see the free strategy session in the banner in this video. So we're going to reach out to you. What's your social media handles?
Austin Charbonneau, which is my first and last name, or you can go to limitless-credit.com. And then TikTok, Austin Charbonneau, same thing.
Awesome, man.
Yep.
Well, I appreciate your time, brother. Thank you. I know we went over a little bit, but let's definitely do this again in a couple weeks because we got a lot to talk about. We can talk about social media, business, family, faith, finances, all that stuff. So super excited, man. I appreciate you joining with us today.
Thank you, brother. Appreciate you, brother.
We'll chat soon. God bless. Okay. Hey guys, appreciate you.